market observations for Brisbane, Queensland. Now obviously Brisbane is always very hot on the investors' lips, an area with a lot of interest and a lot of focus for quite some time. It's as if the nation's investors turn their gaze en masse to Brisbane. So let's unpack the market from a property investor's perspective. Obviously, it's been a long-term trend for Australians in the southern states, the colder climates, moving north, migrating north for warmth. But we can see, what is consistent and reasonably strong population growth coming towards the Brisbane area and sustaining all the way through until 2035. But I do have to flag, remember when we compared and contrast this to Perth, where you are seeing 3 to 4% per annum population growth, this really is only in line with a national average type figure. Okay, so there is a lot of emphasis for Australians moving towards Queensland, but not necessarily into Brisbane. They're moving into the periphery, into the Gold Coast, into the the LGAs that surround up north into Caboolture, into Sunshine Coast, and even inland into Ipswich and Toowoomba. So there is a lot of focus on southeast Queensland, but Brisbane does do well and has projected to have reasonable population growth, but that's not really the story that we're looking at there today. This is really what it's about. This is what is the story on everyone's lips for Brisbane, is the 2032 Olympics. Okay, obviously this is a global event, a very serious and major global event. We've got a precedent case for the Sydney Olympics, the 2000 Sydney Olympics. We obviously now can look back on that event and give us some idea of what is in store for Brisbane based on this event. So 2032 games, we've got upgrades here into public infrastructure, sporting infrastructure, events infrastructure, transports infrastructure. You can see the buildings, the works are in progress. So let's take a deeper dive into this. I might leave the Olympics there at the moment, just to flag it, and I want to go back to the basics for one moment. Because it's not just a story of the Olympics. Let's dig things a little bit deeper. Remember, property investment is a science. There is a formula that we need to follow. And things like the Olympics only constitute one element of this formula. Remember, property investment is about demand and supply. If we have demand outstripping supply, then we have positive price pressure. But what actually constitutes demand? And we see demand formed from employment or assessments of employment, new projects, which is obviously around the Olympics, is focused on these two, improved lifestyle factors and population pressure. That is the demand side of the equation, minus new supply, and we have a lot of that in Brisbane, which I'll unpack in a moment, equals the overarching opportunity. This is the formula that we follow. So with that in mind, let's once again come back into and unpack the impact of the Olympics. This map, we can zoom this right out to the whole of Australia, okay? This map I've zoomed in on the Brisbane local government area. Now, the Brisbane local government area is many suburbs, many hundreds of suburbs joined together. So it is a very large mass of millions of people. And what we see here on the map is obviously the Brisbane LGA here in purple, and each individual new project as a dot on the map. Now these are projects, we track around 1,500 projects in Australia with a capitalisation of $50 million or above. So a lot of work, a lot of man hours goes into curating that list, constantly and evolving that list. What we've done here is we've filtered out any projects that are under $200 million. So this is only projects $200 million market capitalisation or above. And this really does filter the list back to the larger projects that are really set to take Brisbane forth through the Olympic period. And when you zoom in, you've obviously got the lifestyle factors. So you do have the public utility, the lifestyle factors. You've got the redevelopment of the Gabba. Obviously a large spend. It's a construction of a new 50,000 person stadium. obviously positioning ourselves for the Olympics. You've got a lot of infrastructure improvements. So you've got a university improvement, which is the only one of $200 million or more in capitalisation in Brisbane, down here in the south, or south inland. You've got 2 motorway upgrades down here in the south towards Logan, and you've got bypasses and infrastructure upgrades up here in the north. Okay, these are all infrastructure upgrades. Now, apart from this GABA, you do have, so I might just move this over a little bit, apart from the GABA development here, you do have this 4 commercial buildings development on the river, but pretty much everything else is infrastructure and rail crossings, linkages, road upgrades, highway upgrades. So you can definitely see that the wider Brisbane area, the building blocks are in place to prepare ourselves for the Olympics. But a lot of the research we've done over the years is focusing on what type of projects, impact property prices. And whilst these infrastructure projects are great, do they actually impact property prices? The argument is obviously they do, but then I would counter that argument with, would they impact the property prices when they were announced, as of now, before the construction has started, or is underway, or is it at completion, or is it once the Olympics have been held or about to be held, or is it 10 years after those Olympics? So a lot of these are larger infrastructure projects, public spend projects that have a very, long, slow burn. They're going to be generating good, strong drivers of positive utility long into the future, but not that short-term spike or large price pressure that we are really looking for as investors. It's great to have that long-term perspective, that's great, and Brisbane as a global city does provide that. But we also want that 1, 3, 5 year overperformance. We want to make money earlier so we can potentially reinvest it in other areas. So probably to summarise, the Olympics, a lot of, with all of this development going on, we do have a lot of employment that is created through the construction phases. And then on the back end of that, we will be seeing some increases in public utility due to the improved, commuting, improved utility from the stadium. But it's not these large, big ticket items that we generally see in areas like hospitals, universities, the main core drivers of gentrification. We're not really seeing those drivers at a city level in Brisbane. Obviously isolated, this is a jail upgrade down here in the south. Obviously in isolated patches, potentially a cluster here in the north, but more broadly, we're not really moving the dial. You would expect to see this amount of development in Brisbane, a city of that size. Okay, so we really aren't seeing yet a level of spend or new projects coming through the pipeline to justify, mass or change caused by the Olympics. So I think it's probably jumping the gun there a little bit, and as a reason for us to come into Brisbane to invest. It's obviously going to play a role to play ongoing, but just probably a little bit too early in the pipeline for the Brisbane market, for the Olympics impacts. Sorry. So let's jump back in here to the slides, because I wanted to probably unpack that first and just dive into those new projects. Let me go into the on-market purchase analysis. So this is what is going on in the market today. And I like to start these conversations with an analysis of days on market. This is a baseline number. It's an assessment of how long a property takes to list to sell. And we've unpacked that in a video previously. But you can see here, we only look at houses really in this data set. Very similar trend line for units or the aggregate, but the purple data set is the one that we really like to focus on as a litmus test of a market. And we can see here in early 2021, coming through a seasonal, a slower time in January that we usually see. We saw days on market pull up, back up to 35 to 40, and then it's had a mass tightening throughout this year, and it's held this level of around 20 days on market. We can see that once again it has tightened up coming into November, but we're seeing a full 12 months here. We've gone from 35 down to under 20 days on market. This is extremely tight. Obviously, in a practical sense, for a property to be listed, then offers made, offers accepted. You have a conditional cooling off type period, where they might be looking at building and pest and finance clauses, and then for it to go unconditional, it's very difficult to really get that period much less than 20 days. So this is a market that is extremely tight. Okay, extreme levels of scarcity in the properties that are listed, and an extreme amount, a highly efficient market, an extreme amount of demand on the few listings that are there in the market. So it really can't get any lower than this. Okay, this type of low days on market signals do create, or does indicate, extremely high price pressure. Now, this also reiterates this point. So this is the amount of sales that have been sold within 7 days of listing. So it really does need to be, sold within the first 7 days of listing for the days on market for that whole sales cycle to be 20 days. So we can see this spike here in recent times where 1 in 3 listings has been sold within the first week. Okay, that's extreme. This is a very heated market. Very difficult to operate there. And remember, as a market is moving, you've got this extreme price pressure. People are jumping out on ledges and, overpaying for a property just to secure it and causing this dramatic heat to emerge in a market. This is where we're at the moment. Okay, and I can't overstate that enough. We can see that the asking price is shifting very quickly. All right, so let's jump back here with days on market. We can see a correlation here already, very simple one. As days on market is tightening down to 20, very heated, efficient market, you can start seeing that's when the price pressure started to occur as well. And you're seeing this trending upwards, and you'd expect this to continue with the renewed tightening we've seen the last 4 weeks in Brisbane market. So you can see that this is an upwards trajectory market. And the separation between the quartiles, okay, this is giving you an idea of the price spread in the market. We are seeing the top end of the market very active. Okay, heading into Christmas period, we're seeing this top end of the market gapping up. All right, so this is a very heated market that potentially is moving towards the top. All right, we can see the lower quartile gradually increasing, but that really is in line with the suburb median. So it is this top part of the market that is really dragging the market forth. This is once again reiterating the same point. This is the sold price. So the previous slide was the asking price. This is now sold price, and we can obviously see this gapping up here very quickly and strongly, well and truly pulled away from the long-term moving average. And you can see this is a moving average. When things gap up this far above a longer-term moving average, you would expect things to start slowing down and pulling back to the longer-term mean. Okay, so this is an extreme heated market, and we would expect it to have to start slowing down, which we can talk about in a moment. We're now seeing properties, and remember the purple line here is houses. We're now seeing houses selling for 6% on average above the asking price. Okay, so just think about that for a moment. A real estate agent is trying to operate effectively in this market. They're having conversations with the vendor. Let's put it on the market for $1 million. Okay, they really have no idea. It's going into one open home with many people going through it, offer over offer scenario. Everyone's having to lead forth with the best offer first because there's no price discovery. So they're having to go forth with their best offer first, and then the vendor's in the lucky position to go, which offer am I going to accept? It is the first best offer only, and then that's how we start seeing the gaps up. So on average, $1 million listing price selling for $1.06 million. That's a lot of separation there occurring. No price discovery. Everyone is piling into the market, okay? And that's when you start seeing this gapping up to occur. I'm not sure if it's starting to become, apparent to everyone. This is not a market I like to operate in. Okay, we're starting to see parabolic growth occurring, and this is coming towards a point where it's not sustainable. This type of heat, it's not an area I don't want to be paying this separation. Remember, asking prices are usually set, if a real estate agent is doing their job, at fair market value, and then each property is then gapping up 5 or 6% from that fair value assessment. This is not a market I want to be involved in. Remember, it's a vendor that is making money in this scenario and not the buyer. Let's probably reiterate this point again. The market depth. The properties available for sale. Remember, Brisbane, it's quite a large area. We are seeing supply tighten. All right, so remember, days on market is a function of demand and supply in a market loosely, and we have seen the supply in a market tighten, but it has stabilised. Okay, so we are now seeing, because days on market has tightened through this stable period here, we are now starting to see more buyers interested in the market in the last few weeks or 6 weeks. And finally, the days of remaining supply. You know, if there wasn't another listing to be listed in Brisbane, how many days would it take to purchase all the properties currently on the market? So this is a really good signal that looks at the listings coming into the market and the demand, and it's in an extremely high competition area. If you relate this back to the Perth market, think of Perth as 3 to 6 months behind Brisbane. So we've got the days of remaining supply here at around 70 in Brisbane. Perth is still back here at around 80 to 90 to 100. So still indications of a market that's really gaining momentum, but we are 6 months behind. And if you wanted to go back and check that video as well, we are really sitting here in a lot of these charts 6 months prior. So we like to see these emergent trends, and we like to position ourselves just before they start to really work together and form a market, trend line, not purchasing potentially here. Okay, let me just skip through back through these slides. Let's have a look at the rental side of the equation, guys. Let's do some rental analysis. Remember, a rental market generally leads a buy-side market. People generally rent first when they come to an area. All these wonderful jobs created by the infrastructure, people moving north because of the, COVID or the resilience through COVID or even climate, they generally dip their toe into the rental market first. So we generally see that as a leading indicator. Remember, property is not unlike shares or equities. We see price trends confirmed on volume, and we see price trends confirmed with yield movement. So it's very similar to that as well. Vacancy rates, it has started to trend upwards slightly. We can see this was where the tightening was occurring. Extreme tightening. The rental market leading the buy-side market, and we have started to see this coming off. It's this floating back upwards towards the average, the long-term mean. Okay, so this is 6 months before the price movement in many cases, and it's confirmed here in this Brisbane assessment. So we can see obviously, vacancy rates as low, but they have started to come off slightly. Weekly asking rents have been powering ahead. So they have, the pedal has stayed down here, and this is a very bullish sign. Obviously, it's been confirmed in price as well, buy-side price, but we can see weekly asking rents continuing to move. So they are holding the line with price growth, which is, it is a very strong signal to see. Days to lease, extreme shortages just in recent times. All right, so we have seen a tight market, very tight market, a very efficient market, but once again, the recent spike in price growth is resulting in a tightening here once again. And some of the stories behind that, it may be Melbourne and Sydney coming out of lockdowns and going, right, we're going to make the move, we're going to move to Brisbane, and they're coming here and causing this spike. All right, but we're already operating in a very heated market when we don't know when the top is going to occur. It might happen in a year's time, it might happen next week. And we might look back at today or next week in retrospect thinking that's when the market really did start turning for the Brisbane market. We don't want to be trying to catch that knife. We want to be positioning ourselves 6 months before it, at least. All right? So we are seeing extremely tight market activity here. And this is probably just finalising the conversation. Yields have held, rents, we did see that rents were increasing through this same time that we did see asking prices and sold prices increasing. So we have seen yields hold, but they are low. 3.5% down to 3% yields. It's not really acceptable to me as an investor. I generally like to be paid to hold an investment and not have to fork out each week. This is not really paying the bills. It's not really holding the investment. At least through a market top period, you want to be paid, to hold this investment through any market consolidation period, not having to dip into your pocket. So the yields for me in the Brisbane market are not acceptable yet, or at all, and that would mean, I'll be looking elsewhere. So probably final thoughts here. Far too much heat to operate effectively. It's as simple as that. The indications are, very tight, efficient market that is likely to continue growing into the future, but we don't know for how long. I don't want to be playing this game where I'm the one that's going out on the ledge and, providing the gap ups in the market for the vendor to be better off. I prefer to get my ducks in a row and go to other places. If we're comparing and contrasting this to the Perth market, Perth is around that from what we've seen with the charts today, around that 6-month mark behind Brisbane. That's the sort of the market momentum and where we're seeing them correlate to each other. Obviously, great growth, long-term perspectives. Brisbane is Brisbane. Brisbane is warmer, and that's not likely to change. Brisbane attracts southern state residents north, and it always will. The Olympics, 2032 Olympics, is going to provide a long burn, a long burn of, investors poking their heads up and being interested in the market. The storylines, the marketing coming out for the next 15 years around the impact of the Olympics on the Brisbane market. But we probably are a little bit early on in the piece there. We can see we've already got a heated market. It's got nothing to do with the Olympics. We've got a low yielding environment. We've probably missed our buy point. If we're looking for 1 to 3 years of good, strong, above average performance, we probably wouldn't be looking at Brisbane. Okay, we'll probably be looking elsewhere if you're sticking to the capital city markets. Hopefully that takes a deeper dive, helps you understand the Brisbane market more intimately. If you like what you see and you'd like more property investment, education, research and observations, click on our next video.